For many, the allure of the open road is irresistible. The freedom of driving your own car, the wind in your hair, or at least the AC on full blast, the ability to explore new places, it's exciting. Buying your first car is a major life milestone, a symbol of independence and achievement. But before you grab your keys and hit the gas, there's an important step to navigate financing. Car financing may seem like a maze, with numerous paths and potential pitfalls, but it doesn't have to be a stressful experience. By understanding the basics, you can approach the process with confidence, knowing you're making informed choices that align with your financial well-being. Buying a car is an exciting time, but it's also a significant financial decision. By understanding the intricacies of car financing, you can avoid common pitfalls and make choices that align with your financial goals. Our aim is to empower you with the knowledge and tools needed to make your car buying experience enjoyable and financially sound. When it comes to financing your car purchase, you have several options, each with its own set of advantages and disadvantages. It's essential to carefully consider these options and choose the one that best aligns with your financial situation and goals. Let's explore the different paths available to you. Dealer-arranged financing is a popular choice for many car buyers due to its convenience. Instead of shopping around for loans yourself, the dealership handles the legwork, connecting you with lenders from their network and potentially securing financing on the spot. This convenience, however, often comes at a price. Dealerships often mark up the interest rates offered by lenders to earn a profit. This markup, known as the dealer reserve, can add hundreds or even thousands of dollars to the overall cost of your loan. While dealer-arranged financing may seem appealing, it's crucial to do your research and compare offers from other lenders before making a decision. If you're looking for competitive interest rates and personalized service, financing your car purchase through a bank or credit union is an excellent option. These institutions often offer lower interest rates compared to dealerships, potentially saving you thousands of dollars over the life of your loan. One of the key advantages of bank or credit union financing is the ability to get pre-approved for a loan. For individuals with poor credit history, securing traditional financing from banks or credit unions can be challenging. In such situations, buy here, pay here dealerships may seem like the only option. These dealerships offer in-house financing, meaning they act as both the seller and the lender. While this may seem appealing, it's crucial to proceed with caution. Choosing the right car financing option is a critical step in the car buying process. Each option comes with its own set of advantages and disadvantages, and the best choice for you will depend on your individual circumstances, credit history, and financial goals. Picture this. You've just found the car of your dreams at a dealership. The excitement is palpable as you imagine yourself cruising down the open road, the wind in your hair, or at least the AC on full blast. The last thing you want to think about is navigating the often complex world of car loans. This is where dealer-arranged financing steps in, offering a seemingly seamless solution to your financing needs. One of the key things to be aware of with dealer-arranged financing is the concept of the dealer reserve. This is a term that might not be familiar to everyone, but it plays a significant role in the overall cost of your car loan. This dealer reserve refers to the markup that dealerships often add to the interest rate offered by the lender. Essentially, it's an additional cost that can catch many buyers off guard if they're not fully informed. In essence, the dealership acts as a middleman, securing a loan from a bank or financial institution at a certain interest rate, and then adding a percentage point or two to that rate before presenting it to you, the borrower. This practice is quite common, yet not always transparent. While this markup might seem small, it can significantly increase the overall cost of your loan over time. Even a seemingly minor increase in the interest rate can lead to substantial additional payments. For example, let's say you're financing a $20,000 car over 5 years. At first glance, the numbers might not seem too daunting. However, a 1% markup on your interest rate could translate to hundreds, even thousands of dollars in additional interest paid over the life of the loan. This is money that could have been saved or used for other important expenses. Dealerships argue that this markup is justified for the convenience and service they provide. They claim that the added cost is a fair trade-off for the benefits they offer. They handle the paperwork, negotiate with lenders on your behalf, and streamline the financing process. This can indeed save you time and effort, making the car buying experience smoother. While these services do hold value, it's crucial to remember that you, the consumer, are ultimately responsible for the cost of the loan. It's important to weigh the convenience against the potential long-term financial impact. To avoid unnecessary costs, consider shopping around for financing options before heading to the dealership. Many banks and credit unions offer pre-approval for auto loans, which can give you a better idea of the rates you qualify for. Having a pre-approved loan can also give you leverage when negotiating with the dealership. It shows that you are informed and prepared, potentially leading to better terms and lower interest rates. Ultimately, being aware of the dealer markup and taking proactive steps to secure the best financing can save you a significant amount of money. Knowledge is power, and in this case, it can lead to a more financially sound car purchase. Negotiating the price of a car is a common practice, but many car buyers overlook the opportunity to negotiate their financing terms. Just like the sticker price on a car, the interest rate offered by a dealership is often a starting point for negotiation. By being informed, prepared, and assertive, you can potentially save yourself a significant amount of money over the life of your loan. Start by coming to the dealership pre-approved for an auto loan from a bank or credit union. While dealer-arranged financing might seem like the most convenient option, savvy car buyers know that taking a direct route through a bank or credit union can often lead to significant savings and a more personalized experience. These financial institutions specialize in providing loans for various purposes, including auto loans, and often offer competitive interest rates and flexible terms tailored to your specific needs. One of the primary advantages of choosing bank or credit union financing is the potential for lower interest rates. Unlike dealerships that may mark up interest rates to earn a profit, banks and credit unions operate with a different financial model. They aim to attract borrowers with competitive rates and build lasting relationships based on trust and mutual benefit. One of the most powerful tools in your car buying arsenal when choosing bank or credit union financing is the pre-approval process. Getting pre-approved for an auto loan before you even step foot in a dealership can give you a significant advantage and streamline your car buying journey. The pre-approval process involves submitting a loan application to a bank or credit union, which will then review your credit history, income, and other financial factors to determine your creditworthiness. If approved, they'll provide you with a pre-approval letter outlining the loan amount you're eligible for, the interest rate, and the loan term. Armed with a pre-approval letter, you essentially have a guaranteed financing offer in hand when you visit dealerships. Choosing bank or credit union financing is about more than just securing a loan. It's about establishing a financial partnership that extends beyond the car buying process. Banks and credit unions are invested in your financial well-being and often provide valuable resources and guidance to help you make informed decisions. Many banks and credit unions offer financial education programs, online tools, and personalized advice to help you manage your money effectively. For those with less than perfect credit history, the journey to owning a car can be filled with numerous challenges and uncertainties. The road to car ownership can seem fraught with obstacles. Traditional lenders like banks and credit unions often shy away from approving loans for individuals with poor credit scores, making the dream of owning a car feel distant and unattainable. This leaves many feeling like their options are limited and their hopes dashed. However, there is an alternative that has been gaining attention. Buy here, pay here dealerships. These dealerships offer a seemingly convenient solution for those who have struggled to secure financing elsewhere. They operate on a unique business model that sets them apart from traditional car dealerships. Acting as both the seller and the lender, buy here, pay here. Dealerships eliminate the need for third-party banks or financial institutions. Instead, they finance the car purchases themselves, providing an in-house solution that can be appealing to many. This means that the dealership itself handles the loan process, from approval to payment collection. This can be particularly attractive to those who have been turned away by traditional lenders. Using their own in-house financing arms, these dealerships can offer more flexible terms and quicker approvals. While this setup might seem appealing at first glance, especially for individuals who feel like traditional financing is out of reach, it's crucial to proceed with caution. The convenience and accessibility of buy here, pay here dealerships come with their own set of risks and considerations. Interest rates at these dealerships can be significantly higher than those offered by traditional lenders, leading to higher overall costs. It's essential to read the contract carefully and understand all the terms before committing. Ask questions, seek clarity, and ensure that you are fully aware of the financial obligations you are taking on. While buy here, pay here dealerships can provide a viable path to car ownership for those with poor credit, it's important to weigh the pros and cons and make an informed decision. One of the most significant downsides of buy here, pay here dealerships is the high interest rates they charge on their loans. Because these dealerships take on a higher level of risk by lending to borrowers with poor credit history, they offset that risk by charging interest rates that are often significantly higher than those offered by traditional lenders. While a higher interest rate might seem like a small price to pay for the convenience of securing a car loan, it's crucial to understand the long-term financial implications. In addition to high interest rates, buy here, pay here, dealerships often impose stringent loan terms and conditions that can create additional financial burdens for borrowers. These terms are designed to minimize the dealership's risk and ensure timely payments, but they can also create challenges for borrowers already facing financial constraints. One common practice is requiring weekly or bi-weekly payments instead of the more traditional monthly payments. While this might seem like a minor difference, it can create budgeting challenges for borrowers accustomed to managing their finances on a monthly cycle. Furthermore, buy here, pay here. Dealerships often include strict penalties for late or missed payments. In the world of car financing, your credit score acts as a powerful gatekeeper, determining your access to affordable loans and favorable terms. Think of it as your financial report card, reflecting your history of borrowing and repaying debt. Lenders use this score to assess your creditworthiness, the likelihood that you'll repay your loan as agreed. A high credit score signals to lenders that you're a responsible borrower with a proven track record of managing debt wisely. This opens doors to lower interest rates, flexible loan terms, and a smoother overall financing process. Credit scores may seem mysterious, but they're actually calculated based on a specific formula that takes into account 5 key factors, each weighted differently. Your credit score plays a pivotal role in determining the terms of your car loan, specifically the interest rate you'll pay and the loan amount you qualify for. Lenders use your credit score as a key indicator of your credit worthiness, and those with higher scores are rewarded with more favorable terms. Here's how your credit score can impact your loan. The good news is that your credit score isn't set in stone. You have the power to improve it over time by adopting responsible financial habits and making smart credit choices. Here are some practical tips to help you take control of your credit and boost your score. As you embark on your car buying journey, It's easy to get swept up in the excitement of sleek designs, innovative features, and the allure of the open road. However, before you let your heart take the wheel, it's crucial to take a step back and consider a critical factor that extends far beyond the sticker price: the true cost of car ownership. While the purchase price of a vehicle is certainly a significant expense, it's only one piece of the financial puzzle. Failing to account for other associated costs can lead to unwelcome surprises and potential financial strain down the road. Section 2. Budgeting for your ride. Creating a realistic spending plan. Creating a realistic budget is like mapping out your financial road trip, ensuring you have enough fuel in the tank to reach your destination without any detours or breakdowns. When it comes to car buying, budgeting is not about restricting your dreams. It's about making informed decisions that align with your financial goals and provide peace of mind. Start by assessing your current income and expenses. Section 3. Finding your financial sweet spot. Balancing your dreams with your budget. Finding the perfect car often involves a delicate dance between our aspirations and our financial realities. We might dream of cruising in a luxurious sports car or navigating city streets in a stylish SUV, but it's crucial to ensure those dreams align with our budgetary constraints. The key to finding your financial sweet spot is to prioritize your needs over your wants. Section 1. Steering towards a confident purchase. Navigating the world of car financing for the first time can feel like learning to drive itself. There are rules to follow, potential hazards to avoid, and a sense of excitement mixed with a touch of trepidation. The journey can seem daunting, but with the right guidance, it becomes an adventure filled with opportunities. From understanding interest rates to choosing the right loan term, each step is crucial in ensuring a smooth ride. But just like learning to drive, with the right knowledge and preparation, you can confidently take the wheel and steer towards a successful and rewarding car buying experience. It's about more than just picking a car, it's about making a decision that fits your lifestyle and financial situation. Whether you're a first-time buyer or looking to upgrade, being well-informed can make all the difference. Throughout this guide, we've explored the essential elements of car financing, from understanding the different financing options available to demystifying the role of credit scores and the importance of budgeting. We've delved into the nuances of leasing versus buying, the impact of down payments, and how to leverage incentives and rebates. Each piece of information is a tool in your arsenal, helping you to make the best possible decision. Armed with this knowledge, you're now equipped to approach the car buying process with a newfound sense of confidence. Remember, knowledge is power. By taking the time to educate yourself, you can transform what might seem like a complex process into a series of manageable steps. This empowerment allows you to negotiate better terms, understand the fine print, and ultimately, drive away knowing you've made a sound investment. By understanding the ins and outs of car financing, you can avoid common pitfalls, negotiate favorable terms, and make informed decisions that align with your financial goals. This knowledge not only helps you in the immediate purchase, but also sets a foundation for future financial decisions. So, take the wheel with confidence, knowing that you're well prepared for the journey ahead. Happy driving! Section 2. Your journey to smart car ownership starts now. As you embark on your journey to car ownership, remember that it's not just about acquiring a vehicle. It's about making a smart financial decision that supports your overall financial well-being. By applying the knowledge and tips shared in this guide, you can confidently navigate the intricacies of car financing and find the perfect vehicle that fits both your lifestyle and your budget. Start by determining your financing needs and exploring the various financing options available.